It's the deal of the day. SAP buying Qualtrics International for $8 billion. SAP is the enterprise software company based in Germany. Qualtrics, a young up-and-coming company based in Utah that had filed the necessary paperwork to go public. And I guess SAP came in and said, we hear you're looking to raise around $200 million in your IPO. Here's a check with a couple more zeros.
Yes, and I think the second biggest acquisition for SAP ever, maybe, extends its ventures into the cloud, and that's where it is attempting to, position itself for the future as it moves there. All of its business is there, and this is part of that. I don't know the Qualtrics numbers enough to know whether this is a good price, but the market is certainly taking the opposite end of that.
Yeah, I was just going to say, I mean, SAP was down about 6% at one point this morning. So maybe they were clearly there's some thinking there that you probably could have gotten this for less.
Seems like that is, I'm not going to say they could have, but that is the market's interpretation, and actually not one that is different from the large majority of reactions to an acquisition, which is typically that the acquirer goes down because they've paid a premium, and for the most part, people don't think that is necessarily the best use of cash. A lot of times, it's not.
So this is also a good day. And we see this play out in pretty much every industry where either one company gets bought and then other companies in that space rise a little bit as a result of that, or hey, this company in the industry reports some great earnings, so maybe that portends good things for other companies. In this case, it's SurveyMonkey, which certainly has a catchier name than Qualtrics International, but SurveyMonkey shares are up a little bit. So for those who bought into the IPO and have seen their shares of SurveyMonkey essentially do nothing but go down since the IPO just a couple of months ago, today getting a brief respite from that.
Yeah, I don't know. I'm not coming into contact with a lot of SurveyMonkey results in my daily life, although I frequently checked 538 to look at their data analytics work on things political. And in terms of how there are frequent SurveyMonkey polls that show up in their collection, and it's given a very, very low ranking. It gets a grade of D-.
That's it's not as low as you can go, but it's pretty close.
No, there are things that get Fs, but I mean, D- is a bad grade. And I guess in comparison to the way that other polls are done, which are more human intensive, I think the SurveyMonkey results are not, at least by Nate Silver and his crowd at 538, deemed particularly reliable compared to the other frequent surveyors and poll takers out there.
So if you listen to our Industry Focus podcast, you may have heard Dylan Lewis, who hosts the technology show on Fridays, recently did an episode about SurveyMonkey. And so I was going back and forth on Slack with Dylan this morning about SurveyMonkey and being up on the news. And one of his comments was, SurveyMonkey is the Blue Apron of tech. I don't completely understand it, but it certainly doesn't sound like a compliment.
No, it doesn't, especially given how Blue Apron has done as a public company. So I don't think we're hearing a lot of compliments about SurveyMonkey out there. But you could help with their branding.
Yeah, I mean, when Dylan put out on Twitter sort of, what we're going to be doing a show about SurveyMonkey, what questions do you have? All of my questions are about the name. It's like, why'd they pick monkey? Why didn't they go with dolphin? Because aren't dolphins supposed to be the smartest animal? Stuff like that. How many names did they go through before they said, well, we'll go with monkey?
Well, you don't necessarily, when you're polling, want the smart animal, right? You just want the representative one. You're trying to get everybody to take your survey, right? Not just the smart animals.
I think if you're a data analytics company, you want to demonstrate that you are smart. And I'm just saying, dolphin strikes me as smarter than monkey.
Well, I mean, there's debate about that, right?
Not a great debate.
About whether dolphins are smarter than monkeys? I mean, we could debate. I think there are different ways of measuring their intelligence, right?
I guess so. I'm just saying that, you know, when I think about Flipper, I mean, Flipper kind of had it all over whatever monkey was on. I mean, what's the biggest monkey on television in TV history? Is it like BJ and the Bear? That kind of thing?
That's an orangutan.
Was it?
That's not, well, no monkey.
Are they different?
What are you talking about?
You're saying orangutans
what kind of a
and
primate
monkeys?
are you?
Clearly not.
Let me get back to something vaguely related to the issues at hand, which is SAP, which is actually where we started this a while ago. Whenever we're talking about SAP, I'm reminded of the ARSTA rule. Regarding investing in or alongside companies that do business with SAP.
This is named for your colleague Tony Arsta?
Yes.
And what is for the? I know Tony, but I'm unfamiliar with the Arsta rule.
Well, I had to check with him to get the exact formulation of it, but as Tony formulates it for my benefit, it is sell any stock the moment a company announces that they are implementing SAP. The setup always takes longer and costs much more than originally projected. Meanwhile, they also tend to delay other improvement projects. Once they have the bugs ironed out, they will be a more efficient company, but that's probably at least 2 to 3 years out.
Safe to say Tony is bearish on SAP.
Not necessarily the company. They just on companies that end up utilizing them, or at least that the stock price will not be attractive. It will not move in the direction you want as a bull for 2 to 3 years. Now, you know, that's for other people to look at. But I think that it's been his experience that when a company utilizes SAP, it tends to be a little rockier than they hope, or than they at least tell people it is going to be.